Hey guys, this is Rusty 78609 in Central Texas, USA. It is 12:44 p.m. Central Standard Time, January the 7th, 2017, Saturday. And it was cold this morning, but it's warming up nicely now. It's going to be in the mid 40s, and then it's going to start a gradual warm up next week, and we'll be in the 70s for highs and the 50s for lows, and that is perfect. Anyway, some of you probably noticed that I've done some videos about Elio, and Elio's the little three-wheel car that Paul Elio came up with. It's going to get 80 miles to the gallon plus and cost $7,300 and all the miracle things that you can do with a car. And it's been going on for about 6 or 7 years, and he still hadn't produced anything, and he just decided, or the company decided, they couldn't start production now until sometime in 2018. But anyway, when they made that announcement, or that news came out, of course the stock started tanking, going down. And this video is going to be about, even though I'm no expert on investing in the stock market, I did have a Series 7 and 63 license many years ago, so that I could sell stocks and mutual funds and stuff. And I was a financial planner for a while after I left private accounting. I was a CPA, and I felt like I had the background to do some cute little things as a financial planner. Well, guess what I found out? It's all bullshit, okay? And I'm going to tell you a little bit about it. I'll be very frank with you. This will be unvarnished. The cover will be off. Okay? You're going to get to go behind the scenes here. This guy right here, I won't mention his name, but he says, I'm an Elio reservation holder at a non-refundable $1,000 level. When the mini IPO, means initial public offering, came out, that means they sell stock. It says, when that came out, I bought 150 shares at $12 a share for a total of $1,800. A few days ago, someone was selling something like 70,000 shares in one day. I wonder who that was. I think there are only two people capable of doing this, and that is Paul Elio and that other guy helping him, Stuart Lichter, Lichter. I think that it is plain I think it is a plan by them to force all the small stockholders to sell. No, they're not forcing you to sell. They're just picking the berries while there's something out there to pick, okay? Because the stock's tanking. They're just they're buying on the way as it's going down. They're dumping, okay? In my opinion. I'll get to that in a minute. I, of course, sold all at a loss of over $400. That's not bad. $400 is a very cheap lesson. Any way you look at it, the stock market is rigged. You bet it is. And I won't reinvest unless it goes in an upward direction. Don't do it. Don't do it. Let me tell you, the best investment that you can make as an individual, and the safest and maybe the smartest, is to buy real estate in the market where you live, either raw land or something, because at least you can go put your hand on it, okay? And some guy in New York ain't going to scam you out of it. When you invest in there's more mutual funds now than there are company stocks on the stock market. It's been like that for years. Why is that? Because the mutual funds charge fees. It's a it's a cash cow, okay? And anyway, let me take a drink of water here. Hang on 1 second. Let me get my water jug here. Anyway, let me crank up my voice box here. But anyway, so invest in land in your area. The worst thing that could happen is you end up owning some land. At least it's yours, and you can go put your hand on it. For an individual, one person, to invest in the stock market, it would be like winning the lottery for you to pick winning stocks. Now, you can pick the slow growth stocks, the old dividend payers like General Electric and some of the other large, what they call blue chip stocks, and probably do all right, but they're even going to hit their bumps every now and then. A year ago, General Electric was trading at about $17 a share. Okay, now it's at 31 or 32 and it pays a nice dividend. If you can't ride out the dips, don't do it, because the dips, it's like a whale diving down under the ocean and it's coming back up and scooping up all the fish. That's what happens, man. And that's exactly how that scam works. And because what happens, whenever the stock market starts to tank, the ones that can least afford to lose money lose money. And the reason is that psychology of, oh, there it goes, it's over. The world is ending. The world is ending. Well, let me tell you, I got a lot of experience in 1987, because that's when I got into my first little business. Well, actually 1986. And I got my Series 7 license, Series 63, enabled me to sell stocks, mutual funds, and stuff. And basically what I was really targeting was fixed and variable annuities, particularly variable annuities, which invest in the stock market. Fixed annuities basically are all in bonds, fixed income instruments, okay? But what I found out was there's just no way, or I'm not going to say no way, let's just say there's very few ways that you can win as an individual investor unless you get inside information. And trading on inside information is supposed to be illegal. But I guarantee you there are very few people, large investors, that are not getting inside information every single hour of every single day and using that to make money. And they can also play games with stocks if they've got enough money. It's called pump and dump. You start buy, and it start running it up. All the little fish jump in and start buy, and run it up further, and then you just dump, okay, and leave them with nothing. Does that happen? Yep. So, let me give you all right, I was a financial planner, okay? There's two kinds of financial planners. One is a fee-based financial planner. That's where they just charge you a fixed fee. It can be based on your assets or just per session, okay? However they want to set it up. The other way is a commission-based financial planner. In other words, whenever you invest in something, they make money off the commission paid by the people that you're investing the money in, or the company or product, whatever it is, okay? Which is best? Well, fee-based is going to minimize the greed issue, but then you get into this thing, what they call it, I can't remember the name of it, I may think of it, but what happens is if you go with a fee-based financial planner, and there's a lot of honest people in the world, okay, but they have to make a living. All right, let's say you go with a fee-based financial planner. Well, he can churn your account, okay? In other words, what that means is if you're paying him a fee for either buying and selling or per session, then he's going to try to crank up the number of sessions or buys and sells, okay? And believe me, whenever you work with a broker, that they can make thousands in commissions off that, because they make a commission going and coming, buying and selling. They're making a commission coming and going, okay? So, if you have a very large estate and you need someone to manage your money, obviously you're going to have to turn it over to somebody, because you're not going to want to fool with it. All right? Now, the question is, what do you do? Who is this individual that you can trust with your worldly possessions, your wealth? Well, that's where you've got to get some references, and they better be lead pipe. I mean, that means they better be solid citizens, but you got to be careful then. Even a preacher will steal from you. All right. So, you can look at what other wealthy individuals are doing, find who they're using or what firm they're using, and go in as a token customer. In other words, go in small. Don't show them your whole deck of cards in the first meeting. Go in and if you've got millions, go in at 100,000 and just see what they do. Okay, see how well they do. Give them a year or so. And here's another suggestion: break it up. Find you three. Three is a good number. Three successful wealth managers, and diversify your fund among three of them. All right, that's all you're doing is spreading the risk. Everybody's a damn crook, almost. All right, so be careful. Here's a definition of a financial planner, and then I'll get in this video. I went to a meeting in Houston, Texas in the late 1980s. And, mutual funds were still in infancy then. There were a lot, but not near what it is now. And I remember the speaker, and I won't mention his name, but he's a very famous brokerage firm now. And I'm not going to cast doubt on him because he's done pretty well. However, he did make a speech in Houston, Texas. It lasted about an hour, and I was in the audience. This is about 1988, after the market crashed in 87. It went way down. And then, of course, it comes right back up again a few years later, and that's the way the market does. Been doing that for years. And if you can stand those dips, okay, ride it out. Anyway, this guy gets up and he says this toward the end of the speech. He says, let me just summarize everything I said by giving you the definition of a financial planner. A financial planner is someone who converts your assets into commissions. Think about it. I mean, you put up 100,000. The 100,000 is an easy number. Some people put in millions. Okay, you put up 100,000, and this guy's getting a 6 or 7% commission on that product. He's making $6,000 or $7,000 just like that, like that, like that. And all he did was get you to sign a piece of paper and give him a check. And he turns right around and hands that to somebody else and hopes that works out. He doesn't know. I sold tax deferred annuities, fixed. I didn't sell many variable because I didn't like them. They were too risky. Because you didn't want to retire and your money not be there. In other words, you catch a dip in the market, and I was very conservative after I saw what happened in 1987. So the investments I put anybody in primarily were, bond mutual funds or fixed annuities. And fixed annuities invest in bonds, and the return is very predictable and very safe because they diversify those bond issues into municipal bonds, not so much munis, but you get corporate bonds, levels A, B, C, whatever. You kind of spread the risk. You got triple and all those rating services. Be careful with those, man. We found out what the rating services were when the whole world collapsed here a few years ago. All those companies that went under were AAA rated companies. What about the ratings? Come on. But anyway, in summary, all I can say is, have I ever lost money in the market? Shit, yes. Hell, I was in the .com bubble, okay? You can't be a bigger fool than I was. I was up over, I don't know, I think I got up to about 250,000 at one time on paper. Hell, I owned Amazon. I had Yahoo. I had Google. I bought into Google when on the IPO. It was like $98 a share, and but then there's a dip in there, and it was the time I needed money, so I had to sell low, and that's it. That 250 went, the bubble burst, and I was getting out before it went to the bottom. I did all right, but not very good. This guy lost $400. I wish that's all I'd have lost. But all I can tell you is, folks, Elio is just one little stock. And believe me, there's people out there, they call them day traders, and there's people that buy penny stocks and all that. And you'll hear these stories about, oh man, this guy bought a stock at $10 and it went to 500. Come on, man. You go buy you a lottery ticket. The odds are about the same. Okay? Odds are about the same. Whenever somebody tells you they made a lot of money in the market, it made me on paper, they got a lot of paper wealth. Like Bill Gates, he doesn't have cash. He may have a little bit, but his wealth is based on the value of that stock. Same way with Jeff Bezos, Amazon. It's the value of the stock. And that's just paper wealth. That doesn't mean poo-poo. These guys probably couldn't make change for $100 bill. Some of them, I'm sure they could. I'm just being in jest. But my point is, for the average guy that I was then and still am, I guess, don't do it. Greed is what gets you. They know you're greedy. The people that are out there trading this stock, they know you're greedy, or you would not be there. And they know that your greed will not allow you to take a big hickey, a big loss. So they run it up. You think on paper you feel real good, and you're taking your wife and the family out to eat every night. Everything is good. You're going to buy you a new car on all that profit, and pff, they let the air out. Your hero just went to zero. So all I can tell you, if you want to sleep good, in my opinion, put you some money in land. And then go out, drive out there and walk around on it. Put your feet on it. You'll like it. It's a good damn thing. Have I ever lost money in real estate? Never. Have I ever invested in real estate? All the time, several times. And I still would today, but I just don't want to take any more risk. And I don't have much cash either. And, to buy land, to do it right, if you have the cash, that's the way to do it. Buy you a lot. Buy you a lot. Just a lot. You can find you a lot somewhere. Just buy a lot. If they have owner financing and the interest rate's not too high, get in on it. But don't let them give you a contract for deed. Get a deed. Get a deed. Get a deed. Don't do the contract for deed. And I could go on and on and on, but I don't want to. But again, my point is, learn how to invest in real estate. Okay, and as far as real estate investment trust, don't do it. Okay, they're called REITs or REITs or whatever they call them. No, you go pick your own land out and you buy it. You put your hand on it. You can drive out to it. Because when you start putting your money in the market, you just gave to some New York Jew. Okay? I'm Jewish. I mean, I didn't find it out till I was 50 years old in Mongolia. Do I care? No. But I can tell you right now, the people that handle money, they know how to handle money. And they know how to get your money. And they will get it. Even if they get it a little bit at a time, they'll get all of it pretty soon. But be that as it may, be careful when you do investing. And if you're going to invest in the stock market, you can do your homework. I mean, you can do all your due diligence. You can double check it, triple check it, quadruple check it. Looks good, numbers are perfect, and still lose your little hiney. I'm telling you, those numbers don't mean crap. I mean, they use algorithms now to trade stocks. There's no human making those decisions. Those computers are going, and they're just making trades every second. Did you know you can't do that as an individual? You can't. You can't buy and sell the same stock in the same day. Did you know that? Can't do it. Against the law. That's called a Reggae. There's a regulation that governs that. You can't do it. Why don't they allow you to just come and go? Because you might make some money. But the way they got it set up, everything's rigged against you. The small trader, everything is rigged against you. Okay? And they can't lose. Every time you buy, they make money. Every time you sell, they make money. Because they get a little off the top every time, or the bottom. Whenever you buy or sell, they're getting money coming and going. Anyway, enough said. Thumbs up. Carpe diem. Adios. Bye-bye. Buy USA made when you can. Buy Mother Earth when you can. And take deep breaths. drink plenty of water, walk for exercise, stretch, and enjoy your life. But be careful. Adios, guys. Bye.